Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis report of Paris rapeseed, Winnipeg canola and Malaysian palm oil markets. I'll start with Paris rapeseed. There are still two key patterns here. The first and larger one is the February 2021 to July 2022 ascending broadening wedge pattern. Currently 736 to 995 and right off the top of my daily chart on the upside. This was not a perfect pattern, but it had been the main market driver higher in the earlier part of this year. The break lower in July has left the following incredible targets on the downside. The primary target X is in the 352 area, for harder to get secondary target X1 in the 217 even area. These are obviously, pretty much way out there targets that you can put into your diary on the back page and just look at it maybe once a year. The second, smaller pattern was in development until the end of September, and on the surface seems a more reasonable pattern. It was created from the break lower of the larger pattern in June and July and is an optimized falling wedge pattern, currently 559 3/4 to 589 1/4. The key recent features here have been the temporary halt to the decline at the February low of 599 3/4 back in August, the earlier breakdown through the 50% Fibonacci line of December 2020 to April 2022 move at 644, the false break lower mid-September, and above all of these, the break higher up and out of this falling wedge pattern in late September. Now, before I start recapping my previously highlighted possible upside targets for this pattern on the top side, I'd like to reiterate something I've said these past 3 weeks, and that is there is a key problem with this pattern. It has been created in the wrong place. By that I mean it should have been formed after it had an ascending pattern, not, as in this case, after a great big gapping drop lower. This has previously led me to suspect that perhaps this pattern may morph further along into something else. So far it hasn't morphed into anything else, hence we still have now a break higher out of the falling wedge pattern despite today's sharp drop lower that may lead to these possible two targets. A primary target X2 would be in the 702 3/4 area, and a secondary hard to reach target would be in the 757 area. Since I laid out these possible targets for this pattern, the market has just ignored them. Not gone down, just ignored them, and gone sideways more or less between the 50% Fibonacci line of the March 2016 to April 22 move at 613 3/4 and the 50% Fibonacci line of the December 20 to April 22 move at 643 3/4. However, that may be about to change, as streaking in from above we have the declining medium moving average, currently at 656.5. In early November, we'll see the market start to mix with it and with current market levels. And that is when we may find things become even more interesting. Winnipeg canola. Whilst the September 2021 low at 839.20 and the August 2021 low at 817 even both acted to halt the declines back in late June and early July, it was originally the 50% Fibonacci of the October 20, April 22 move of 863.80 that triggered the retro reverse engines to pull prices up as the market moved on the way down, and then again as recently as late August, acted as a cap to the rise, and right now, today, as support. What has become evident since the start of the sideways to slightly lower movement we've seen here since June is that there's a shallow bear channel, currently 777.40 to 881.30 in operation. And it is this that's been driving the current market. Now, for the last 3 weeks, the market has been testing the upper bear channel line without much success. But a number of new patterns and a previously highlighted factor are beginning to make themselves known. The first to discuss is the possible patterns being formed. Now, we already have a bear channel, but we may also now have a possible early September to date bullish halfway hesitation pattern in formation. It is still early on this, but the groundwork is being done. Secondly, with a little effort today and tomorrow, we may have a weekly key reversal up set for this week. Prices need to reach up and over 882.30 by tomorrow close of business, and then close either over 876.60 or under 869.10 to make it happen. This is not as far-fetched as one may think. Then there is the factor. It's something I've been talking about now for 2 weeks, and I quote, dropping rapidly into the frame of the market is the medium moving average. That's currently at 877.40. And it may be a race as to which gets first to the upper bear channel line. End of quote. This medium moving average is now in direct conflict with the market, and it will be interesting to see who wins. Bursa Malaysia crude palm oil. Since July, the key pressing features lower on the market have been the break below the July-September bull channel, and more recently, and more importantly, the curving lower pressure of the short medium moving average, currently at 38.59. This short medium moving average has been the key resistance until this week, when prices broke up through it. This seemingly sudden rise was not sudden nor a surprise. You see, the short medium moving average's pressure lower had by its action created a bullish pattern of its own, a September to date reverse head and shoulders pattern with a neckline currently at 37.34 that was triggered last Friday by a combined key reversal up and bullish engulfing pattern that actually encompassed all the previous days of that week. This reverse head and shoulders pattern now has a primary target not that far at 42.45. Yeah, it's not that far. And a secondary hard to reach target X1 in the 44.40 area. However, there's a new factor that is screaming in on down onto the market, and that is the rapidly declining medium moving average, currently 42.93. It'll be interesting to see if this moving average will have a similar influence to the now flatlining short medium moving average of a few weeks ago. The medium moving average should start interfering with the market in very early November. Thank you for listening. This weekly broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright Eddie Topic and ADM Investor Services International Limited. And here comes the final bit.